Good. All right. There you go. Okay. I just saw the chat. Okay, 10. Okay, Tilly is doing good. That's good. Beatrice, 4. I hope we can bump that number up, right? So, like I was saying, I'm going to be covering a very advanced topic today, right? Which is, give me a second. Let me just share my screen. Let me know if you guys can see it. You guys see it? Boom. Drop a 3 if you guys can see what I'm seeing in front of my screen right now at this moment. Drop a 3 in the chat. Just making sure. Okay, 3. You guys are seeing it. All right. Cool. Good. Good. I like it. I like it. All right. Let me just put in a slideshow. Okay. So Trading Tuesday. Every Tuesday we do this every single week, where actually a top leader actually comes in, right, and shares value and gems about trading and investing, whether it be in the different markets like crypto, forex, stocks, the NFTs, right? So now today, what I'm going to be talking about is different market orders. So there's actually different topics that I'm going to be covering, right, for today. So right now, for the first one is different market orders, right? So as you guys know, and some of the alerts that we actually do get, right, we get alerts that sometimes it is not a market execution order, or meaning that it is actually not an alert where we just jump right in, right? So what is actually different market orders? So there's actually 4 different market orders, right? So this is actually trades that is not going to be moving right away, right when you put it into your phone. Make sense? So now the first one is a buy stop. Now, when it comes to a buy stop, actually later in the trading view, I'm also going to be showing you guys how to use the trading view on how to understand within the different market orders. So now the first one is the buy stop. Now, when it comes to the buy stop, right? So actually, when you put in a buy stop order into your trading app, which is the MT4 or MT5, whichever you guys are comfortable using, right? When it comes to the buy stop, right? So when you put that market order, before that actually trade goes live or starts moving, the market price has to hit that specific price line or that market price in the order before it starts to become an active trade. All right. And then the second one is a buy limit. Now, a buy limit, when it comes to the buy stop, it's the opposite of when it comes to buy limit. Now, when it comes to buy limit, the market price has to go down to the price line that you put into the order, right? Below, it has to go down first before it starts becoming an active trade. Now, let me repeat that again so I don't confuse you guys. Actually, let me know if I'm speaking too fast, because the last time I did the launch call, somebody told me I was like talking too fast, but I guess it was just the energy, to be honest. But okay, so buy stop, right? Before your trade goes active, the market point, right? Before your trade goes live, up, right? It has to go up first to touch that line, a higher price from where the market price is. Now, on the other hand, when it comes to buy limit, your order or your trade will only go live if the price goes down and hits that order, that buy limit order that you have below, okay? Now, on the other hand, for sell stop, now, of course, for sell, it has to go down, right? Now, when it comes to sell stop, so the market price at the current moment has to go down to the price order that you have inputted into your trade before it starts becoming an active trade, okay? So it has to go down first and touch that area that you put into your trade, right? That specific price before it becomes an active trade. Now, of course, when it comes to sell limit, right, it goes the other way as well. Whereas your price, right, the market price has to go up to your price order, right, within your trade before it becomes an active trade, okay? As you guys can see it here. Actually, Zeke, so shout out to Zeke. I saw he dropped this picture as well in the investing chat, where you guys can also save that into your cell phone to help you when it comes to different, to understanding, different market orders, because we also get alerts like this in our alerts phone. Now, second one is the candlestick. Now, the candlestick, right? This is what it looks like. I know you guys see those little red and green, bars. What is it actually does, right? This is actually a way for you guys to understand it pretty easy, okay? So as you guys can see, a green is what they call a bullish candlestick. Now, what does a bullish candlestick mean? Now it just means that green candlesticks are the ones that actually goes up, right? Green means going up. Now, on the other hand, a bearish candlestick, meaning it's red, it means that it is a candlestick that goes down, right? Now, of course, when it comes to the body of the candlestick or the candlestick as a whole, there's actually different ways of understanding it. Now, when it comes to the bullish, you guys see this line that my cursor or my arrow is pointing at. You guys can see it, right? So that is actually what you call the high. Now, what does the high mean? So actually the high is actually the price where it actually has gone up to, the highest price or the highest area that that candlestick has touched. And by the way, each candlestick actually represents a certain time frame. Okay, I'm going to show you that in the trading view as well. So that's actually what you call the highest price where that candlestick actually have touched. Now on here, on the bottom, there's also another line. Now on the bottom, it is actually the lowest price that that candlestick actually have touched during that time frame. All right. Now, when it comes to the rectangle as a whole, the body, of course, in the middle, that is what you call the body. And then on the top is actually where it closed. Right? Because as you guys know, in the markets, you know, markets actually open and market closes. Right? On Forex market, there's different markets that actually open throughout the week. Now, when it comes to the stock market, you know, as you guys know, that it actually opens at 9 a.m. and closes at 5 p.m. Right? Now, on the candlestick, on the bottom, that is actually where it opens. I'm going to give you guys more of a clear understanding later when we go to trading view, but basically this is how to actually look at it much simpler. All right. So the bottom part is actually where that candlestick opened, and then on the top where it's actually closed. Now going the other side, which bearish candlestick. So the wick, right? That line is actually called a wick. So a wick, right? Just admitting some people in. So the wick on the bearish candlestick is the same thing pretty much on the bullish candlestick, right? On the top, of course, the highest area or price or market that actually candlestick have gone up to. Now on the bottom is actually the lowest, right? Same thing. But on the other hand, on the rectangle part, it's actually way different. So now when it comes to the bullish candlestick, on the top is where it actually closed. But then on the bearish candlestick, that is actually where it opened. Okay. Now, because as you guys know, a red candlestick actually means it's going down. Okay. Green going up. Now on the bearish candlestick, on the bottom part is actually where it closed. All right. Good. Drop some threes if you guys are still with me. Right. I see some cameras. I see you guys watching it. Right. Drop some threes if you guys are still with me. Okay. So that's basically the candlestick for the bullish and the bearish candlestick, right? For you guys to also understand when it comes to, you know, inputting alerts and also looking at the market, right? Now, uptrends. Okay, now uptrend. Because with the market, any market specifically, right? Forex market, crypto market, or the stock market is actually called trends. Now, trends is basically just shows you where the market is moving. Is it going to be moving up or is it going to be moving down? Now, of course, when it comes to those movements, it actually consists of, you know, small, tiny parts. Like an example for an uptrend consists of higher highs and higher lows. Now, it'll be much more simpler for you guys to see later on the trading view. Now, uptrend, higher highs and higher lows. The other hand, downtrend consists of lower lows and lower highs. We'll also show that in the trading view in a second. And then side trend, basically, this is what I call the stagnant phase because you don't actually know where the market is moving. So it's just floating around. There's actually no confirmations if it's gonna go up or if it's gonna go down, right? That's what I call a side trend. Now, that's pretty much it for the little presentation, little visual, right? I'm gonna be going on to trading view to show you guys what I was talking about and for you guys to understand much more clearer, okay? Just admit people in. All right, if we go to trading view, by the way, for you guys, especially for customers that actually wants to learn how to trade, right? You guys can go into trading view. Trading view is actually one of the websites that you guys can actually go into and explore more into trading, especially drawing up trends, looking at candlesticks, you know, looking at let's just say Bitcoin, you know, where it's going, right? History of Bitcoin, the movements. You guys can also go into that. This is tradingview.com. Okay. You guys can put it down in your notes. So actually, when you go to TradingView, you guys can search different specific, let's say, stocks, cryptocurrencies, bonds, and some futures, right? Even Forex pairs. Like just an example, if I go in here and go look at USD Canadian, I can go look on what's happening within this specific currency, right? And you guys can also have a lot of tools for you guys to use here on this side. Let's just say you have a specific horizontal line, some arrows, some lines that you guys can actually use to determining when it comes to trends. You want to do some markups. This is more into like the advanced stuff. You also have brushes, rectangles, shapes that you guys can use, and different strategies also that you can try out in this trading view, right? This is what I call like the drawing board, right? For most traders, this is what they call the drawing board. So now we're going to be looking at the candlesticks, okay? Candlesticks. Bear with me, guys. I don't have a mouse at the moment, so I'm all on my laptop. But okay, let me know if you guys can see it clearly, right? Drop a 3 if you guys can see it clearly. Good. Okay, we'll look at this one. Look at the specific candlesticks. So, like I said earlier, right? On these candles, let me just put a rectangle so we know what we're focusing on. Okay. This one. All right. Then let me just change the color. Okay, cool. Right. So now when it comes to these candlesticks, what does the green candle mean? Is it an up or a down candle? What is it purposely for? The green candle, is it up or down? Drop it in the chat. Okay, let's go. Up. There you go. Up candle. Yes, an uptrend, right? Up candle. So now when it comes to the green candle, if you guys were putting down notes, right? What does this first line on the top mean? Is it a high or a low? Oops, did I lose the arrow? Let's get the brush. Okay. Oops. This one. This wick. This line. Is it high or a low? Okay. All right. Is it high or a low one? The highest or the lowest that that specific candlestick has gone up to? Drop it in the chat. Okay. There you go, Jackie, the highest. Yes. So the line on the top is actually what you call a wick. And then on the top, it is the highest that that specific candlestick has gone up to. So like I said earlier, each candlestick represents a certain timeline. So this, as you guys can see on the top, it is a 3-hour, right, time frame. So meaning each candlestick actually represents a 3-hour movement of the market. All right. So just an example, if I switch it to 2 hours, it will suddenly, right, switch to 2-hour time frame. So as you guys can see, the time also on the bottom, 15, 17. So each candlestick actually represents a certain time movement during that time in the market. All right. So now let's look at, again, the candlesticks. Let me just make it bigger, so it's easier for you guys to see. Okay. So now on this candlestick, okay, on these candlesticks, right? There's 2 candlesticks. On the green one, rectangle. On the green candlesticks, which one, what does this top part of the rectangle represents? Oops. This part, okay. This part on the top of the green candle, the top part of the rectangle. What does that represent? Is it an open or is it a closed? It's okay. You guys can also answer. It doesn't matter if it's right or wrong, right? So actually on the top part of the rectangle, right? This is where actually that candle specifically closed, okay? So as you guys can see, once this big candle closed on the top part, this one on the bottom is where it opened another candle, right? And of course, on the bottom wick, that is actually the lowest that specific candlestick has gone the lowest at that time, right? So this part on the bottom is what you call the open, where that specific candlestick opened, and then on the top is where specifically closed. Now going into the red candlesticks, right? So now after that specific green candle closed, we got a red candle, which is a down candle, right? A bearish candle. So now when it comes to the red candle, let me just move this. So when it comes to the red candle, the top part of the red candle is where it actually opened, right here, right? So as you guys can see on the green one, on the top part is where it closed, and then where it opened is the bottom. Now, on the other hand, for the bearish candles, the top part is where it opened, and then on the bottom is where it closed. And specifically for the lines, as you guys can see here, the wicks, it is pretty much the same thing on either candlesticks that you guys see, high and lows, they are both the same thing. But what only differs, and the only difference that you guys can see, is the open and the closing of each candlesticks. All right, drop some threes if you guys actually got that, or is it a little bit confusing? Drop some threes if you guys are getting it, you guys are following with me. Okay, threes, all right, good. So you guys seems to be getting it, all right? So now that is actually the candlesticks when it comes to understanding each candlestick that you guys see on the time frame. So now we are gonna be going into the trends. Okay, let me just make it smaller. So we have a much better view of the market. Okay, all right, good, good. Let me just remove the drawings, then make it an hour time frame. Okay. And then let me just scan the market. Okay, here, this is actually a much, actually a great example, right, for the market when it comes to the uptrend, right? Cool. So we're gonna be focusing on this specific part of the market, right? This one. Okay, so on the bottom, as you guys can see, this is what we are going to be calling as our starting point. Starting point of this specific trend, the uptrend. And then now, an uptrend, like I said earlier, uptrend consists of higher highs and higher lows. Okay, higher highs and higher lows. You guys can see my screen, right? It's clear, very clear. Megan, I can see your camera, so yeah. All right, cool. Okay, let me just make it big. You guys can see. So now, uptrend consists of actually higher highs and higher lows. So now, on this specific market, right? That sudden movement that you guys can see here on the bottom, those 1, 2, 3, 4, 5, about 5+ green candles, then eventually it bounced down, which is what we call an outside return, right? That is actually what we call an outside return. So now what is actually an outside return? It just basically means that the market actually took a little breather. So it didn't eventually start shooting up right away, but instead it went up right after that 5+ green candles, and then eventually became stagnant and stayed over at that specific area and then bounced right off. So now you have your outside return, your first outside return here. Okay, there you go. Make it small. This is now your first outside return. And then after that, right, it suddenly broke that specific area and did about, of course, 5 green candles again to start shooting up. So now what happens is that this was your first high, right? Then eventually that outside return, it broke that specific area, making another highs. So now you have another highs that you guys can see in the market, which is over here. This is now a new high. Your new higher high, because this one is actually higher than the first one that made, right, from the outside return. So now, after taking that new higher highs, of course, bounce down again, making another outside return. So now that becomes your higher lows. Okay, higher lows, and then eventually, which happened again after breaking that specific area, which is the highest that specific wick, up to here. You see that line, it broke it, make another highs. So now you steadily got new higher highs and new higher lows, right? Which is, this is another higher highs. And then bounce right off again, making an outside return. And then, oops, not that, text. And then you got another higher lows, okay? So now, when you guys are looking at the market, you can easily spot these things, especially when we are trying to input an alert, because sometimes, you know, the market experts, right, they know what's happening with the market, of course, with their 20 plus experience, but you can also spot some things. If you think that is going to be an uptrend market, then sure, you can put in the trade. But if you think otherwise, then maybe you can look for another alert that you guys can also take from the alerts one channels, right? So drops and threes if you guys are actually following and getting it, and if it's not confusing to you guys. So uptrend just consists of higher highs and higher lows when it comes to the market, right? Starting point, that first high, outside return, new higher highs, and eventually creating new higher highs and higher lows. Now that becomes a uptrend, all right? So now I'm gonna be removing, you guys can also take a screenshot, by the way, if you guys want. Okay, in 3, 2, 1, okay, good. I'm gonna remove the drawing. So now what is actually a side trend? Now a side trend just basically is the market doesn't know where it's gonna go, right? You don't know if it's gonna go up, you don't know if it's gonna go down, right? So just an example for that specific market is this one. This one. So now you guys can see it here. This is what you call a side trend market. So now what does a side trend market mean? So like I said earlier, it doesn't know where it's gonna go. There's no signs of higher highs, higher lows, or there's no signs of if it's even gonna go down as well, right? So this is what you call a side trend market, a stagnant phase, where it's just bouncing right off. Like as you guys can see, it's going down, going up again. It's gonna go down, keep going up, and then it's gonna go up, breaking that another area, and then it doesn't really know where it's gonna go to. Now, that's basically what you call a side trend market. So I'm just gonna put a little text. You guys can also want to screenshot that here. Boom. All right, side trend markets. That is what it is. You guys can screenshot that, put it in your phone, and from there, 3, 2, 1, boom. All right, so cool. I'm gonna be looking now and showing you guys what is a downtrend look like. Now, when it comes to the downtrend, it is basically the opposite of an uptrend, of course, right? So with uptrend, it consists higher highs and higher lows. Now, when it comes to downtrend, it actually consists of lower lows and lower highs, right? So this is actually a great example. Just make it bigger. All right, there you go. So we're gonna be focusing on this specific market. So this is gonna be our starting point up to here, right? There you go. Okay, so now after that sudden side trend market that it actually did, as you guys can see, this is actually a side trend market where it doesn't know where it's gonna go. After that, it actually went to go on a downtrend. So we're gonna be doing and putting in the text again. So this is gonna be our starting point. Okay, starting point up to here. And then from there, that first movement, right? The first movement going down to somewhere here, I believe. Yeah, that's the first one. After that, it actually did end. Okay, let me just switch the color so it's not very confusing. From this one, right? That's the first downtrend movement that we actually saw. And then eventually it cooled off a bit on this specific part of the market. Now that becomes our first outside return. Right here, outside return, right? That little outside return that it did. And then from there, that becomes our first movement on the downtrend, right? The lower highs and the lower lows. So after that sudden outside return, it eventually broke it again, doing another downward movement, breaking that specific area. So now you have a lower lows, which is down here. Okay, and then a lower highs right here. And then from there, when it comes to the downtrend, breaking it up again on the specific area right here, as you guys can see. After that lower highs, sudden movement, breaking it, going down up to here. Of course, it creates another lower lows. And then bounce it off again, creates another lower high. So there you go. As you guys can see, that is actually how a downwards or a downtrend movement works and what it looks like. Let me know if you guys are getting it or if you guys got it. Drop a 3 in the chat. So that is basically what a downtrend movement looks like. The side trend market as well. You guys can see it here on the left side. Now that is a downtrend market or movement that you guys can see and spot into TradingView, or even when it comes to you guys putting in the alerts. Now downtrend, let me just put it here, right? Equals lower lows and lower highs. All right, cool. Okay, there you go. You guys can also screenshot that. So 3, 2, 1, boom. So that's basically it for this trading call, right? I do appreciate you guys for hopping on. Actually, drop a 3 and a thank you to GCC for always putting in these calls for us to tune in and learn and get the most value from our system and also from our organization, which is GCC, GC Champions, right? Give a massive thank you to GCC. Drop it in the chat. Thank you, GCC, for always setting up these calls. Now, that's it for me today, right? For this trading call, I do hope that you guys actually understood a thing or two when it comes to trading, right? Now, that's pretty much it for me. And I will see you guys in the next one. See you guys in the chat. Let's go.